It's been a sobering day for the entire auto sector, I think it's fair to say. But particularly Ford has had a particularly difficult second quarter. But let's start with a high point. Let's start with North America. Give us a sense of how you did in North America in the second quarter.
Yeah, well, North America had a solid quarter. It generated a margin of 7.4%, but within that, we had a $600 million hit related to lost production of high-margin vehicles due to a supplier fire that occurred in the quarter that our team amazingly was able to recover from in 8 days. We also had a settlement, class action settlement related to Takata airbags with a nominal charge of about $299 million. So if you adjust for those things, we actually ran a margin that was close to 10%. So the underlying business of North America was strong, and that was inclusive of some substantial headwinds around commodities. And
we'll come back to the commodities issue because that's a problem for all the auto companies right now. But let's talk about actually some of the challenges you have, particularly China. It really jumped out at me. China, you had a tough quarter there, and for reasons that go beyond commodities.
Yeah, actually, the issues that we had in China as well as Europe, those were the two factors behind the guidance change that we provided today, are really more about our business. If you look at China, we were down about $500 million, and that was both on the consolidated operations as well as our joint ventures, which are unconsolidated, and largely around a number of factors. An aging portfolio, we're under-indexed in terms of that portfolio vis-a-vis the market, which is very hot, with a lot of strong demand from consumers for crossovers and utilities. We also had some go-to-market strategies in the quarter and some capability issues in our marketing sales organization, which have resulted in some issues with dealers in terms of their profitability and stocks that we're going to have to address as well. So these are issues that we have to address. We already have a plan to do so, already making progress, but clearly that was a very disappointing result for us in the quarter coming from China because it's a very important market.
As you suggest, those are things largely within your control. You say you have a plan. What timetable do you have? When do you expect to see a real turnaround in China? Because I noticed you're projecting a significant loss actually for the year there.
Yes, we are, and what we're expecting in the second half is we'll get some new product, a new Escort, a new Focus, and then subsequent to that, there'll be a whole slew of new products that starts to address the aged portfolio issue, and that includes quite a number of SUVs. So we'll start to see improvement there, and then the team is working very, very hard to address the issues in terms of our dealer stocks, in terms of production adjustments, and also addressing the dealer profitability issues. So it will take some time, but I can tell you that we're doing this with a sense of urgency and moving very, very quickly.
You've also referred to commodities and some of the input cost issues that you faced. How large are those problems? Can you quantify that? And how much of that is because of some of the tariffs that have been put on and some of the trade uncertainty as opposed to just underlying commodity business?
Yeah, that actually is a big headwind for the business. At the beginning of the year, we indicated that we thought we'd see commodity cost increases for the full year of about $1 billion. That now looks like about $1.6 billion. And that difference is largely due, if not entirely due, to what was the threat of tariffs originally, and then real tariffs on steel and aluminum, because we can look at what happened once that threat was there, and then the implementation of the tariffs, and the price of steel, the price of aluminum has really skyrocketed well above the prices that we see outside the United States. So that's a big hit, primarily in our North American business.
So that's what, as I understand it, the tariffs that are already been announced and put into effect. There's further trade tariffs potentially going into effect. Have you made any effort to try to quantify what that could be, particularly when it comes to China?
Yes, we have. If you look at the quarter, we probably had about a $50 million hit in terms of our China business related to the implementation of higher tariffs on the China side in response to tariffs put in place by the United States. And if we look at the full year on the assumption that they stay in place, that could be $200 or $300 million of headwinds as well.
President Trump has announced now with Jean-Claude Juncker that actually it appears we're not going to have tariffs, at least for the time being, on European imports because they've come to terms in various ways on trade. How much relief will that give Ford, or is that just baked into your numbers?
Well, we hadn't assumed any headwinds from that. I think the thing to take away from that, it's very encouraging to see the two parties coming together to work on free and fair trade. And we hope that that same mindset and cooperation from both sides takes place in terms of the modernization of the NAFTA agreement, and then, of course, the issues in China that we talked about.
And finally, Bob, also in your release, you refer to $11 billion, $7 billion in cash that you expect for restructuring charges over the next 2 to 3 years or so. And in addition, we were expecting to get your CEO's new plan, strategic plan, in September. It appears that's been delayed. Can you give us a sense of what that restructuring is going to look like, and when will we know what it is?
Yeah, one of the things we've been talking about, and we do so again today in the earnings call that we'll have a bit later, is that we are on a really substantial redesign of our business, allocating capital towards areas where we think that we can be very successful and have demonstrated the ability to do so already. Maybe some new areas of opportunity as well, and then away from the parts of the business that maybe traditionally we continue to invest in over and over again, but yet never really got the returns that we needed. So that is going to result in restructuring charges over the next 3 to 5 years, which at the moment we've identified as potentially being up to $11 billion. So we're not providing specifics, but I think it does give you a couple of things to think about. One is we have a strong point of view about what we're going to do, and two, we have a sense of what the implications of that will be in terms of the impact on our EBIT relative to restructuring.
And when will we hear from your CEO about exactly what the plans are?
Well, we're going to tell you what we're going to do when and as we can make these announcements. As you can imagine, this is going to cover a lot of our operations around the world. There are a lot of constituencies involved. It's a very complex thing to do, as we did in North America about a decade ago. And even in that case, what we did is, as we could announce things and manage the impact on all the constituencies, we would do so. And that's exactly the same playbook that we're going to follow for this redesign effort that's underway right now.